country's largest beer maker, United Breweries, will be happy with that. But increasing raw material prices may spoil the party, will it? Importing expensive barley to manufacture beer in India is probably proving costly. This even as the company wrestles with states on taxes and alcohol ban scare as well. Joining us right now to talk about all of this is United Breweries Managing Director Shekhar Ramamurthy. Shekhar, good morning and thank you so much for taking the time out. Actually, just off the cuff, does this football season or the sporting season mean more beer is flying off the shelves in India as well?
Good morning. Not really.
Okay.
You know, in India, we don't really have a culture of going to pubs and watching games. And, you know, India is not playing in the World Cup. So that also is a significant factor. So it's an exciting time for people watching the game, but doesn't really make a big difference to our business.
Fine. Let's talk about business then. You know, how is the scenario looking like? You did do really well compared to what the industry did in FY18, and that's to be expected. You are the industry leader there. How are things shaping up in the first quarter, and how is FY19 looking like? Is it in line with the guidance that you'd given when you came out with your numbers? Slightly soft, single-digit kind of volume growth that the industry and possibly you might see in FY19?
Well, our forecast is similar. We see the industry growing mid-single digit, maybe a little bit better, 5-6%. We definitely see ourselves growing faster than that. Last year, we grew at about 10%. So we definitely see ourselves growing faster than the industry. You know, there are many factors which go into that. You would remember that last year, we had a twin impact of first the lingering effect of demonetization. Then our industry faced the highway ban, which had a very profound impact on our business. Now, those things have moderated. We've come back to normal. So our forecasts are based on an assumption, it's a big assumption, that there will be no major policy disruption. And we see that happening year after year, actually. You know, apart from the huge ones of highway ban and demonetization, we had a steep hike in excise duty in Maharashtra in October of 16. Actually, October recently, not even 16, last year. And steep hike in duty in Bengal early this year. So all those have a dampening impact. But overall, you know, because India is, as I like to say, is not one country in many ways, and especially not for our business because we're a state subject. So overall, taking all states into effect, we are still hopeful that the industry is back on a growth path. And we are quite confident that we have the brands and the plans to do better than that.
You know, the last time that I spoke to you, Shekhar, you were very confident of you gaining market share, you know, or at least maintaining, if not gaining it. When I asked you about the competition that is brewing up, you were categorical in saying that if companies lose market share, those will be the smaller ones. You as a company will only gain. Now you've shown that because I believe you've gained about 200 basis points market share in FY18. In light of the kind of slightly subdued growth that the industry at large might see in FY19, would you believe that there could be tectonic market shifts in this year as well, wherein 200, 300 basis points by the largest player could be expected?
Well, you know, to expect those kind of changes in market share year on year is difficult to predict. You know, there have to be opportunities and we have to take advantage of them. We had some opportunities last year, which we took advantage. But one thing is clear, and if you remember our conversation last time, is that the competitive forces are going to get stronger. You will have more brands. We will bring more brands into the market. We've already shown that. We brought Kingfisher Storm, a premium strong beer last year. We brought Amstel recently. Initially in Karnataka, and we rolled out across the country again in the premium strong beer. We have seen our competitors too bring in brands. So that is going to be the norm now, that as the market grows, as the consumer matures, there is greater expectation of choice. And I've said this before, that there will be, consumers will be doing what we call repertoire consumption, which means across categories, and beer is not special in that. People no longer consume only one brand. they want to experiment, they want to have a choice. So people have a repertoire. And as a market leader, we recognize that, and we will ensure that we will have a strong repertoire for consumers to choose from.
Yeah, I know that you probably already do. So then tell me, if indeed the year is going to be marked by the volume picture, the way it is shaping up, would pricing help you gain, or would pricing help you show the kind of revenue growth that people would expect you to? Because you have taken modest price increases, I believe, recently in the states of Karnataka and Maharashtra as well, 10% if I'm not wrong, in Telangana too. Is this the order of the year? Modest price increases coupled with single-digit volume growth, driving revenue growth for you as a company?
Yes, of course. I mean, the revenue growth is always a function of both price and volume. You can't have only one of them. However, in our industry, as you know, pricing is a very complicated affair. Many state governments do not allow us a price increase. The price increase that we recently got in Telangana was after almost 4 years. So pricing is a complicated issue, which is why when we talk of revenue, we talk of 2 or 3 things. A, we talk of growth of premium and super premium brands because they give us better revenue. We talk about strong positions and growth in the more profitable states because of the way the tax structure works in different states. Our revenue and margin profile is different. And 3, we also look at our costs, and we constantly keep looking at non-value adding costs and taking them out. So yes, revenue is an important driver, but it is not just price increase in the classical sense, but it's also growth of premium brands and growth in those states which have a better revenue profile.
No, so what I meant to ask was that would this be the set of price increases that you would do, or could there be aggressive ones? And 2, if you indeed manage to do price increases the way you would, what would happen to the market share in different states? Because as I see from your call as well, you continue to gain share in South. In North, in select markets, you would have done well, but Uttar Pradesh, because of the route to market change or otherwise, you did lose some market share. So what would be the nature of the price increases, and how could that impact your growth into various geographies within the country?
Well, I just want to clarify, price increases per se, I don't see them having an impact on market share. What will have an impact on market share would be a obvious ones, a competitive activity, and 2, sometimes in season, and you mentioned Uttar Pradesh, in season it is sometimes our inability to meet the demand. Route to market change is given for everybody, but you would find once we announce Q1 results, and Q1 is still going on, you will find that this year many of the big organized players have not been able to meet the demand fully in season, in the first quarter in the season. So that's the reason why there could be a little change in market share in markets like UP. But by and large, you would not find significant change in market shares across states in the season with respect or in comparison to other parts of the year. So to your original question, do you anticipate more aggressive price increases? No. Very aggressive price increases do have an impact not just on share, but they also have an impact on the industry volumes. So no, they're not going to be significantly aggressive market price increases, but they will be modest because we also need to pass on some of our cost push. And it's an inflationary country. You would know that. You talk to people across the spectrum, and everybody is clearly predicting that we are in for a phase of higher inflation than we have seen. So all those are factors that we as a business need to keep in mind.
Yeah, and so that's my final question actually. Are you seeing inflationary costs impacting operational metrics? I believe the barley imports have been more expensive. You probably on record saying that packaging costs might put an upward pressure on margins as well. How is that piece shaping up?
Well, those are that's part of business. We have to anticipate that and we have to plan for that. You can't always pass on costs to the consumer. We have to find ways of being more efficient, and that's an integral part of how we at UBL work. That we constantly keep looking at our processes, constantly keep looking at our costs to make sure that we improve the way we manage costs and improve our efficiencies. So yes, there will be inflation across commodities as well as energy, and moment energy prices go up, price of everything goes up because all input materials use energy. So yes, there will be inflation, but we are quite confident that we have plans in place to mitigate quite a bit of it.